Cheryl, we have a coverage on Royal Orchid. We believe that Royal Orchid is one of those hotels which has got a very low asset light kind of business model. In fact, over the next 18 months, the company is proposing to add 1,000 more rooms to its inventory. And I think the kind of numbers which the company presented for FY23 shows that the industry is very robust. Average room rentals have gone up quite significantly. And I think if the investor has a 12 to 18 month kind of time frame, then I think one could expect a decent upside from the current level. So Royal Orchid definitely seems to be a good attractive bet if one looks at the medium term scenario. Cheryl, I think as Kunal mentioned, Bharti Airtel has been doing pretty well. So I think longer term, definitely the outlook looks quite promising. But I think if he can book out some profits and redeploy his profits in MapmyIndia, MapmyIndia is interesting because recently there has been a lot of excitement for these drone IPOs as well as drone companies which are listed in the secondary market. MapmyIndia has developed some unique software for these drones. So I mean, clearly now going forward, the growth momentum from this market segment is going to help the company quite significantly. So I think a small exposure in MapmyIndia is also desirable, provided the investor has a slightly medium to long term. Shristi, Artemis Medical is concerned, it's a small company running a small hospital. And I think considering the kind of buoyancy and the performance reported by this company, I think despite the fact that he's made a decent profit, I would suggest that he should hold on. Better numbers could be expected in FY24. And as far as Godawari Power is concerned, I think it's a well-established player in the power in the steel segment. More importantly, it's got a very good integrated kind of setup. Here also, I would believe that despite the fact that steel is largely a commodity business, this company has performed significantly well over the last say 2 to 3 years. So here also, I think if we can hold on for the next say 12, 15 months, provided the metal cycle turns favorable globally, I think he could expect a decent risk reward here. So for both the stocks, I would suggest he should hold on. Don't make a hurry of exiting early at this level. I think Triveni Turbine should be held on because see, it's one of those unique players which makes power turbines for a host of industries. They're sitting on a very large order book, and my sense is that this stock represents actually the capital goods sector, which has been showing remarkably very strong numbers. Our sense is that FY24 also should be a very strong year, and hopefully even the quarter 1 numbers should be quite strong. So here I think despite the fact that she's made a decent amount of capital appreciation, I would believe that if she can wait for the next 6 to 12 months, she can ride the capital goods rally and obviously make a further kind of upside from the current level. So I think it's better to hold on rather than booking out at this early stage. You can definitely look at investing in this stock over the next for the next say 2 to 3 years. But I think looking at the agrochemical kind of business which has undergone a slight downside because of overall industry related problems, I would suggest that it's better that he decides to time his buying once the quarter 1 numbers are released. As far as the contract research business is concerned, it's doing very well, and the company has bagged several new clients. So I would believe that in case he wants to buy, I think he should wait for the quarter 1 numbers, because my sense is that another quarter of weak performance from the agrochemical business could come in, and possibly things should start improving from September. So clearly a buying opportunity could come in after the Q1 numbers, and he could possibly accumulate the stock at a slightly lower level, which could give him a better alpha over the longer term. No, I think as far as AB Capital is concerned, Shristi, I don't think any kind of negative development is going to happen over the next, say, 2 to 4 quarters. The company has performed very well. The management commentary has also been very strong, and there's a very good scope for value unlocking, over the next, say, 12 to 18 months, considering that they are a holding company for the insurance business, for the AMC business. Obviously, this kind of business is going to be unlocked at a future point of time. Insurance business is definitely a good opportunity. So I would suggest that even if he wants to buy at the current odd levels, keep a time frame of at least 2 years, which can give him a decent risk reward. And as far as IDFC First is concerned, I think Shristi, even the current level looks attractive. I think if the investor has at least a 18 to 24 month view, the bank is now well positioned in terms of the CASA deposits, in terms of its net interest margins. And I think the commentary from the management has been very reassuring. So I think any dip in the market should be used to accumulate and keep a time frame of at least 2 years. So I think he's gotten IDFC First Bank at a very attractive level of 50 rupees. I think he should not book out at this level. I would believe even the first quarter number for FY24 is going to be pretty strong. Plus the management commentary is going to be extremely solid. So I think, there could be some further re-rating, not only in the medium term, but in the short term also. So I think wait for the next 6 to 12 months. I would believe, the stock could do a significant re-rating even from the current odd level. So would suggest a hold. As far as JK Paper is concerned, I think the investor can hold on. I would believe that paper companies still are in a kind of a very favorable situation considering the supply shortages emerging globally. Most importantly, paper prices have been rising significantly, and I would not be surprised that we could see another range of price increases by most of the paper companies. So I think JK Paper, I think if the investor can hold on for the next say 12-15 months, I believe the paper cycle still looks quite promising, and JK Paper should do very well. As far as Chambal Fertilizer is concerned, I think this company definitely benefits from a good monsoon, and I think they are large players in the urea market. Most importantly, if the investor has a medium term view, he can hold on. But these kind of stocks normally pick up before the monsoons, and obviously once the monsoon completes its session, then I think some profit booking comes in. So I think you have to keep a watchful eye till the September or December quarter, and obviously then take your profits off the table. So I think as of now, it would be a hold from my side.
All right, this one also is coming to you, Avinash, and this one's come from Sham. He's writing to us from Nasik, and he's asking if Imagica is a good buy right now.
Yeah, I think Imagica is a very well-positioned play in the amusement park market. In fact, it's one of the only players in India which is listed. And I think considering the kind of monopolistic hold it has in its business, plus the kind of turnaround they did in the current year, my sense is that this is a business which is now going to see a lot of strong earnings growth over the next 2 to 3 years. I think a lot of debt has also been repaid. And the best part is, the company will have the benefit of having a very large tax shield because they have a large accumulated tax loss on their books, which would actually help them, set off any tax payable for them. So I think net, if the investor has a couple of years in mind, then I think he could definitely make a decent risk reward. Both these stocks, Shashti, should hold on, both Adani Ports as well as Adani Enterprises. See, I think the most of the negatives are now built into the price. And I think the worst is over for both these companies. I think gradually both the companies are now looking at fresh funding plans, obviously through institutional funding. Obviously, the retail route has been put on hold. But I think most of their expansion plans are going as per a track. As per Adani Ports, I think it's a pure infrastructure play because ports are a very important components for a country as well as for the economy. And Adani Ports has got the benefit of having almost 35 to 36 very integral ports in their portfolio. So I think if the investor can hold on both these stocks for the next 1 or 2 years, I think definitely he could see a decent risk reward. But yes, these stocks would be volatile. And at least considering the fact that this year we're going to have a state election, next year general elections, I think the near-term move obviously will be volatile, but longer term, I think there could be a lot of money made here. So he has to have the patience to hold on. Yeah, I think first of all, the investor seems to be quite frustrated with his choice for IRCTC, but IRCTC is a regulated monopoly and a platform company. And I remember that at one point of time, the share had jumped quite significantly. And most retail investors wanted to buy it at any level. So I think he's gotten at a reasonably good level. I would suggest that, if he can give in at least 2 years to this counter, then I think he could definitely make a decent risk reward, considering the fact that, it's a platform driven business. The internet booking business makes a EBITDA margin of almost 60% odd. And I think with normalcy coming in, I think the tourism part of the, business is also going to pick up. So I think keep a time frame of at least 2 years. And I think he can definitely expect a decent risk reward. I would not suggest him to book a loss at the current levels, considering that the long-term prospects of the company are quite solid.